Hi, I'm Andrew Overman at Location, and he's...
I'm Michael Webb at Mortgage Republic.
And together we endeavour to answer our viewer questions each week relating to the mortgage world. So delighted to be joined by you again, Michael, and thank you for giving up your time. This week's question actually came from a viewer who was very upset in the early part of the week. I know that they're hoping to buy through ourselves, and you're dealing with a mortgage, and we've helped them negotiate this. The question was, the house I'm buying has been downvalued by a surveyor for mortgage purposes. What are my options?
Okay, so we go through phases of seeing this more and more prevalent in the market. Typically in a rising price market, surveyors take some time to catch up with what the market's actually doing, particularly as sales take time to go through and they get dragged out a little bit. They haven't got the completion data to look at to justify the prices, for example. But also sometimes prices do just get overheated and people have agreed to pay something that a bank's just not willing to lend against that value, as they really don't see the comparable evidence there at all. So you have a few options, and the first is to obviously speak to the estate agent, let the estate agent know what's happened, liaise with them and ask them if they have any comparable evidence that maybe the surveyor hasn't seen. This is rare, if I'm honest, that the surveyor is going to have missed an amount of comparable evidence to assess. So you can appeal that valuation with some lenders, not all lenders, and the success on appeal has become less and less as the years have gone by, because pretty much the data that an estate agent would have is just accessible to the surveyor. So the surveyor is going to have seen it, and really what you're trying to do is tell that surveyor that they are wrong. And sorry to insult any estate agents here, but surveyors, RICS chartered surveyors, are the only ones legally qualified to value property in the UK. Estate agents don't hold any qualifications. Sorry, Andy.
No, this is very
However, let's look at the reality of what actually happens. A surveyor, to value the property, talks to every estate agent in the area, asks for their opinion, and then just puts their name against it. So I'll let you decide who actually valued your property, the chartered surveyor or the estate agent. So that's the reality of how that works. You do have the option to go and try another lender who would use another surveying company. Mm-hmm. So speak to your mortgage broker, say, right, we had, just picking some big surveyors out there, Connells or Countrywide go around this time, being the two biggest in the UK probably. They downvalued it, shock. And then we try a lender that maybe uses eServe or has their own internal surveyors or is going to panel to someone locally or something different. You may get a different result. Again, you might not. So you're then at the point of having two options. So let's say you're doing a 90% mortgage, you're buying at 300,000, so you were borrowing 270. It was then, I'm going to have to make the numbers bigger to make it easier for the maths, downvalued to 250. Unlikely, but it makes my maths easier. That means they will only lend 225 against the property. You have two options if you cannot get that valuation changed. One is that the vendor renegotiates with you and sells you the property at 250,000, or you now have to put in a £75,000 deposit and not a £30,000 deposit. Okay. Now, I've used extreme numbers there to make my maths easier to keep this video flowing. Usually that down valuation is likely to be from 300 to 285 or something like that. But the reality still applies. You would only be lent your percentage of your product against that. Now, if you have quite a large deposit, for example, you were putting down 40% and it was downvalued, if you still want to purchase at the higher amount, it might just mean picking a different product and taking an 80% loan to value product instead of a 60%. Obviously, that's going to change your mortgage payment because the interest rate is going to be higher. So all of this can be worked out for you. But what it usually boils down to is the vendor moving their expectation on price. And I'll let you kind of decide how likely that is. That will depend on the size of that down valuation, or you putting in more money. Now, if you were putting in a 10% deposit, being asked to then put in a 25% deposit, if you could put in a 25% deposit, you'd be doing that. So usually, if the vendor won't move, this deal kind of falls to pieces on valuation, because if the vendor won't move on price, it's usually for a reason that they need to sell at that price for their onward purchase. So the smaller the down valuation, the easier it is to make things work, be it the vendor moving a bit, the buyer moving a bit on their deposit and things like that. If you've got a big down valuation, usually of like 10% upwards, where the surveyor kind of then feels that actually the estate agent's either got it wrong, or what's more likely than the estate agent getting it wrong is it's gone over the asking price and a few people have started to get a bit competitive with it. It's affordable for them, but they've gone too far for a bank to feel comfortable. That's more likely than something that just sold at asking price on Rightmove. Usually it's the over asking price things that we have an issue with.
And I think it's
they're your options, really.
Yeah, and I think it's important. I think you hit the nail on the head there. You've got that common ground, haven't you, between vendor and buyer. So it can be negotiated between the two. It doesn't have to be one party taking the entire hit or having to increase the deposit. But essentially what we're saying is that if the property is downvalued, the mortgage lender will only lend the percentage loan to value on the surveyor's figure.
Yeah, it's loan to value, not loan to purchase price.
Yes.
Yeah, and the surveyor sets what the value is. Now, 99 times out of 100, 90 times out of 100 maybe, 9 out of 10, you will get a surveyor that just agrees with the purchase price. So to point this out as well, unless you are massively buying it under value, you will set precedent on value. So if it was on for 300 and everyone in the world thinks it's worth 300, but you're buying it for 270, that property will be valued at 270. You get much below that, the surveyor will start thinking why, and will start asking questions, and that may also cause a decline. If it's outside the lender's criteria, it falls too much under value. It then becomes a money laundering kind of worry for the bank that they're kind of involved in it.
So would it be fair to say then that the surveyor will be looking at the loan to value and measuring the building society's level of risk against that purchase as well? I.e., would it be fair to say that the value would be looked at more stringently for a 95% loan to value mortgage than perhaps a 60% loan to value mortgage?
Yes and no. I mean, the asset's worth what the asset's worth. Okay. What you're more likely to get at 90% is a physical attended value. In the current world at 60%, they might just do an electronic valuation. Okay. In that it's a fairly modern property. They can see it's already mortgaged on title. They can see that it is what it is. They've got Rightmove. They've got previous sales stats. They know what the market's done. They're able to go, you're buying it for 300. That looks right. Yeah, crack on with it. But if you're buying it at 300 and you want to borrow 280 against it, we might need to go in and just check that, make sure it's as we expect inside. So yeah, the less deposit, the more likely you are to get an attended valuation. Some lenders aren't set up for electronic valuations either. They will do attended valuations, but very much the less perceived risk, the less attention is paid to the overall value. Because if you're only borrowing 100,000 against a £500,000 purchase, as long as that property exists, there's zero risk for that lender, because they'll get their 100 grand back plus all their fees and still have to give you 300 grand at the give it away price. So
yeah. Brilliant. Well, so if your home is being downvalued and you don't feel your agent is working enough on your behalf, you want to reach out for somebody to get advice, then please don't hesitate to give me a call. Obviously on the mortgage side of things, if you don't feel you're getting the right level of mortgage advice from your broker, or you would like to explore other avenues, then please don't hesitate to reach out to Michael at mortgagerepublic.co.uk, or lodge an inquiry on the website mortgagerepublic.co.uk. I'm Andrew Overman.
I'm Michael Webb.
And you've been watching Mortgage Matters. Thanks for watching.
Thanks, Andrew.